Afternoon, everyone, and here we are having a very important webinar today on audited financial statements and important company law compliances. Keeping in mind all the private limited companies that is related to our area, and it is our extreme pleasure to have, and we are very fortunate enough to have our own CA Salim Raja sir, who is always there for us at Nasik branch, helping us in all these matters. And sir, I welcome you all to this today's webinar.
It is my pleasure.
And today we will be discussing more on the issues related to our area, Nasik branch. So over to you, sir. Let us dive in with all these important aspects which we have related to this audited financial statements.
Yes. As far as these audited financial statements are concerned, because Companies Act has given a lot of changes right from British time. It was 1866, the first Companies Act came. Then it was revised in 1882. And then 1913, which was followed by India as well as Britishers.
Exactly.
Then after independence, we enacted Companies Act 1956, which was there for almost 57 years till this new Act 2013 came into force. And it came with a lot of changes, reduction of sections and but it is now rule-based. Most of the rules, those sections are reduced, but rules are increased. So every time you have to refer the rules.
Yes.
And then after when it came into force on 1st August 2014, then after also there were a lot of amendments were made because studies were made by the experts and ICAI and MCA and other even experts made some suggestions. So government made some changes. Correct. And the first amendment, important amendment came in 2018. You know, earlier in Companies Act, we used to use the concept of fixed assets, which was replaced by PPE, that is property, plant and equipment. There was small change. Then the major change came in with effect from financial year 2021-22. Where a lot of changes were made. Most importantly was that rounding of figures compulsory. And actually there were many objections to this because there are many small companies having turnover in lakhs and crores.
Even in thousands.
Even in thousands. It should have been there only for those companies who are having turnover of more than 10,000 crores. And okay, it is a government decision. Then they introduced in 21-22, most importantly, promoter shareholding. Earlier, we used to give the note on only 5% equity held by the shareholders. We used to give the list under authorized capital schedule. But they increased this promoters holding. The government wanted to see the changes in promoters holding because that is more important for the listed companies because there are government controls on promoters holding. Though that was again introduced. And another important change in this 21-22, you know, we have got long-term borrowings from bank, which we categorize under long-term loans, correct?
Yes.
And this short-term amount out of that, which is below 12 months has to be separated and reflected under current liabilities. That was another major change they introduced. Then shareholding promoters I just discussed. Then under this trade receivables, the trade payables in creditor side, you have to give the aging
schedule
analysis. Below 1 year, 1 to 3 years, above 3 years, and like that. So aging analysis must match with the your figure of trade payables in.
Exactly.
And in trade payables also payable to MSMEs and payable to non-MSMEs. Because again here the purpose of the government is to have a control on the data of MSME outstanding.
Exactly.
Then trade payables case also they say the same thing. Aging analysis. Then when this financial year 21-22 amendments came in Schedule 3, additional disclosures were
required,
included, and they are very important. I mean, auditors have to be very much careful about this. That is, immovable property is not held in the name of company.
Yes, and I think there are a lot of companies where the motor vehicles are owned by directors and payments are made by the company.
And that is why that they make that contra entry. Loan is credited to bank in the company balance sheet, and vehicle is shown on the asset side, but it is in the name of director. And main purpose of this entry is just to avoid the RTO tax.
Exactly.
Because I think for corporates it is 3 times than what there is for individual.
Normal.
So that is why they do it. But actually, I am of the opinion auditor should definitely report it.
Okay. So that reporting should come.
Reporting should come.
Okay.
Then failure to register the charges. Earlier it was not there. So it has become, later on we are discussing in short how the charges are to be registered. So now you have to report it. So I will suggest that you go and check the list of index of charges which is available on master data on MCA of each company. What are the new charges created during the year and what are the new charges satisfied during the year. Even that you can come to know when you audit or make the general ledger scrutiny where this loan is closed. Then it is our responsibility whether that charge was earlier registered. If it was registered, then it was satisfied or not.
So as an auditor, we need to check it on MCA.
We need to see that. Submission of stock and book debt statement to bank. This is very much important for us because they submit the stock to bank. Same stock, whether it is reflected in finalization or not. Many times there are juggleries just to increase the drawing power at the time when they submit to bank. So you should take that stock statement which is submitted to bank and acknowledged by the bank officer.
Okay, so that is what auditor needs to be done.
Auditor needs to see. Because we should have a proof that the same one is submitted to bank. Then CSR expenditure under section 135, that is also included here. We will later on discuss in detail this, how the anomalies are there. Then income surrender or disclose that has not been recorded in the books of accounts. Some tax proceedings where might be there, 132 might be there, or some department might have issued the notice about the earlier assessments and you declared it. So whether that has been accommodated in the financial transaction in the books of accounts or not.
Yes.
For that you have to make the inquiries because every time they are not going to give the advance intimation to the auditor.
So as an auditor, we need to make those inquiries.
Then trading and investment in cryptocurrency, that was latestly added because there are RBI restrictions and central government is very particular about this because a lot of fund management and money laundering was done through cryptocurrencies. So they are more particular about it. And then when the company has been declared as willful defaulter, because there were very large borrowers.
Corporate borrowings.
Corporate borrowers. Willful defaulter. So bank that has to be informed. And most importantly, they have added some 14-15 ratios, current ratios, and liability ratios, liquidity ratios. So ratios are very particular. And in ratio analysis, particularly if there is a major variation, more than
current year and previous
20-25%, I don't remember exactly. Then you have to give the reason for that. So that care has to be taken. Then financial statement, if you see, must comply with the accounting standards. Because normally we make the audits, but accounting standards and auditing standards is very much neglected
as area. As auditor, you need to be very careful.
You need to be very particular about it. Because if you see your audit report under section 143(3), we certify that books, these financial statements are complying with the accounting standards specified in section 133. So that is why it is your duty whether these accounting standards are complied with. And most important thing, if there are variations or there are deviations from the accounting standards, we have to give the reasons. Means company has to give the reason. And then we have to also comment on it. Yes, deviations are given. These are the deviations and reasons of the deviations, reasons thereof. So that is very important. Then section 143(10) talks about standards on auditing. Absolutely. So that is also included in main statutory audit report. Section 129(1) is very much important as far as this audited financial statements are concerned, and your audit report is concerned under Section 143.
Right.
129 specifically talks about true and fair view of the financial statement.
That is at the end what
That
we
is
give.
Basic. It is a basic. Then 129(2) is there, board to present the financial statements at AGM, along with the consolidated financial statements if they are applicable. So 129 that way is very rigorous section. If you see section 129 subsection 7, there are penalties, even imprisonments for the company officers and directors.
Oh, so there are
129(7). Imprisonment is also there because that is from company side.
Right.
129 and 129(7) penalties and fines are from company side. But you see, our industry brother CFO, if he is there,
right,
and if he is there, then he may be directly
facing the music. Yes.
Of the authorities.
Right. Right. So this is, we have to be very careful with 120.
Careful. 129. True and fair view is a very broad and exhaustive concept.
Right.
It includes everything.
Right.
And penalties are very rigorous.
Yes.
Then 129(3), presentation of this we discussed already. Then we will have little discussion on accounting standards or vice versa, this IND-AS, Indian Accounting Standard. You see, Abhijit, those Indian accounting standards are harmonized with IFRS on the pattern of IFRS.
So they have kept IFRS in mind while preparing this.
Because IFRS, you see, I mentioned here, it is observed in 144 countries. You will be surprised. Right. IFRS. So government is moving into that direction. Right. IND-AS has been, Indian accounting standards have been brought into practice. Right. Right. And so how the applicability is made. In 2006, when they amended, bring out the notification, it was earlier in 16, it was only for listed companies and other companies with a net worth of 500 crores. In 2017, they reduced that threshold from 500 crores net worth to 250 crores. If we have got client of this much net worth, you must prepare the balance sheet in IND-AS, right. Indian Accounting Standard. That is our responsibility. We have to guide the company. Right. And from 2018, for banks, it has been made mandatory.
Right.
Banks, NBFCs, and insurance companies. So IND-AS is very important. Again, for the auditors, you have got companies of bigger volumes, of larger turnovers.
Right. Right.
So then we will come to, see, when you prepare the balance sheet and when audits are ready, there are so many things. I'll discuss it. When financial statements are ready, you call it draft audited financial statements. Correct?
Right.
When they are under Companies Act, those draft financial statements must be approved by the board of directors.
Yes.
Under 134(1) subsection 1 of the Companies Act.
So before we get it finalized, it should be approved by the board first.
Board of directors. Right. And actually, I will suggest auditor must take that resolution certified by the director. That is very important. It is approved by
safeguard
the board. I'll give you some example here also. Actually, the case faced by one of our professional colleagues.
Yes.
Correct. And then again in the same meeting, when you approve draft audited annual financial statements, in the same meeting you have to pass a resolution that so and so directors will sign on behalf of the company. Right. You see, the provision is a 134(1) is like chairman alone can sign, whole-time executive chairman, if he is authorized by the director. Otherwise, audited annual financial statements of the company must be signed by at least two directors. One of them must be managing director. Now, managing director, the concept is CEO.
Right.
It is not. At least two directors must sign. Second thing, if CFO is there, under provisions of the Companies Act 204. See, mostly listed companies, CFO is mandatory.
Right, right.
Then that CFO must also sign the audited financial statements along with two directors.
Right.
If whole time company secretary is there in employment under sections of the Companies Act. Then that CS who is under full-time employment should also sign the
Okay, so that additional
financial
requirement.
statement. So two directors, CFO and CS,
Yes.
and then auditor.
Right. So all these four
So
people.
it is our responsibility, this much authority is whether they have signed the balance sheet or not.
No.
Another very important point I can say, and I would like to give a warning to my professional colleagues. I know one case in one city. There were 4 directors and there were dispute between those 4 directors. 2 directors were in one group and 2 directors were in another group. As usual, auditor, what he did, he accepted the balance sheet signed by the 2 directors. Everything was okay. Income tax return was filed, ROC return was filed. And another 2 director came to his office.
Right. Now that
saying that we don't know anything.
Yes. So
It is not approved by us. No board meeting was taken. Unnecessary, the case was dragged to the civil court. And he was forced to stand in a witness box. Unnecessarily. So I suggest, particularly, this is my practice in my office. I take the resolution signed by all the directors, authorizing any 2 directors to sign the balance.
Very important. So, sir, if we very important point, and we need to be very careful. So, related to this, if we could elaborate that, what should be all the auditor's responsibilities as far as your board report is concerned? Means when we are saying that board report is being prepared, so what should be the auditor's responsibilities related to?
See, actually, board report is not at all the responsibility of auditors.
Right.
But see, if you take a moral view,
right,
or very honest professional,
exactly.
In private limited company, practically what happens, we only draft board report on behalf of the company.
Right.
We provide all the services under one umbrella.
Yes.
And nothing wrong in it. After all, you are not going to sign, but at least you monitor how it is prepared. If they prepare, if there are mistakes, you point out.
Exactly.
What mistakes are there.
Barabar.
So it should be under your control. Otherwise, better you draft it on behalf of them.
Right.
There are some 25, 26 points in this board report.
Right.
We will discuss what variations or what problems are created, what mistakes are committed while reporting the figure in financial statement, the reporting the figures in board report. Means there should not be a contradiction. That is very important.
Yes, sir.
And basically the law is 134(2), auditor report must be attached to the balance sheet.
Yes.
Director report must be attached to the balance sheet. So that is a full set is created. Correct. And under 136(1), financial statements, board report and auditor's report must reach to the shareholders or members before 21 clear days of the AGM. Clear days means date of AGM and date of serving should be excluded.
Right.
Purely, clearly 21 days gap must be there. Many times it happens, balance sheet is prepared late and that problems are of course there. But law says, before you send the notice, it should have been signed.
Right. Exactly. Your financial should
suppose AGM date is coming, you use the option of shorter notice.
Right.
Signed by 95% shareholders.
Yes.
But 6 दिन में लेना है, 25 सितंबर को बैलेंस शीट हुआ, 30 सितंबर को AGM लेना है. So then you will have the option of shorter notice. But always see that notice is sent
clear
before days. That balance sheet is signed.
So clear 21 days should
be. Clear word is very important. It is used in Companies Act.
Yes.
Then we'll have some little, what accounting entries are there, what are the mistakes, that is not our discussion point today.
Yes.
We are discussing more of what professional care should be taken.
Exactly.
While signing the audited financial statements. Auditor report, under section 143(3).
Right.
Our main auditor, independent auditor's report
by chartered.
Yeah. Standard audit report, you say.
Yes.
Under auditing standard 70.
Right.
Correct. This 143(3)A to 143(3)J.
Right.
So that is, it starts from, there are many aspects you cover. Books of accounts are unprepared as per Act. Balance sheet is matching with the books of accounts, accounting standards
Have
are
been
followed while preparing the annual financial statement. If there are branches and branch auditor is there, the proper reports are received from the branch auditor. One of the point in 143(3)(g) is whether directors are disqualified or not. So we mention always on the basis of information received,
Right.
whether those directors are qualified or not. So many points are there. Even it is about, talks about 143(3) talks about whether internal financial controls are
in place.
effective.
Right.
Then in one of the point is whether there were certain transactions which has got the impact on the company functioning. That is very important. Actually, normally we neglect it. Something happens abnormally, extraordinarily in the one particular transaction in that financial year. That has got an impact on the functioning of the company that you have to identify.
Right.
You can say that is a very important material thing.
Yes. Is it affecting your going concern or not? That is also very
many
much
important things. Then 143(j) is other matters. 143(3)(j). Other matters. Again, because this 143(j) is read with Rule 11.
Right.
Of the accounts and audit rules.
Yes.
Correct? So that is again 11A to 11G. Correct? 11A is your important litigations were there, and then whether there was any effect on this. Then 11B is provision for losses on the long-term contracts.
Right.
11C is there are whether funds were transferred to investor education and protection fund. Suppose dividend remains unpaid, not payable, unpaid. Then that has to be transferred to the after a particular year to the protection fund of SEBI.
Right.
So these types of additional reportings were made mandatory. Right. Then 11D was about demonetization. That has been removed now because it is
of no use
not
now.
Effective, it is not of use. So you are not going to report on it. Then 11E, 11F and 11G is latest added into 24 from financial year 23. 24. Fund 11E was funds received by the company on behalf of some beneficiary and you transfer. So you are just a mediator company.
Right.
Received from A, you are B and transfer to C. Same thing, invested on behalf of ultimate beneficiary. Right. Because this layer of investment company not allowed for more than 2 layers.
Right.
And this is just to control the money laundering.
Exactly. The whole purpose is
so that has been added in other matters, important matters. And last one, G is recent, it was added, and that was about audit trail. Whether that accounting software used by the company have the provision of audit trail. We had a seminar in March 24.
That is the latest addition that
and that audit trail must be there throughout the year. It was not disabled for any single day. So auditor must see that, and honestly I think it should be reported whether it is followed or not. Normally old Tally 9, that provision was not there. They have introduced in Prime, Tally software. Prime and all software.
Yes, and as an auditor we need to comment also, whether we have verified whether audit trail is in application or not. As an auditor we need to call it.
There are 2 things. Audit leg, one is any audit trail, that auditor has to report.
Right.
And the system shows entry was recorded on so and so by this person. Yes. It was amended by so and so. This person's auditor comes to know, and you can ask the reason why this entry was changed. Or why this entry was deleted.
Right.
Why this entry was replaced. Yes. That is the benefit of this audit trail software.
Yes, sir.
Then let us have some discussion on CARO. CARO additional reporting requirements are there. A CARO is not applicable to small companies. If the company, now the small company definition has been, it's very safe for the small company. Turnover 100 crores or paid up capital of 10 crores. So most of the small companies are now exempted. Many auditors are still preparing CARO. I said, why you are taking trouble in preparing CARO? A lot of answers are to be given. So now most of the small companies will be excluded from CARO. Then another one, which is responsibility of auditor along with the standard audit report, is the internal financial control report. Because if the turnover of the company is more than 50 crores or bank borrowings or loans are more than 25 crores, then this IFC report is also mandatory. You should see those provisions. Many latest amendments, when they are made, you should keep a track of it. Whether this company, when I am giving a report, whether this CARO is applicable, whether this IFC report is applicable.
So as an auditor, we need to be very careful also that the earlier year it may not be fitting into CARO or IFC reporting, but this year it may be, or maybe it is this year and maybe not next year. So one has to be very careful.
One has to be very careful. Because this age of computer copy paste is very dangerous.
Exactly.
The same thing is continued.
Right.
You should be very careful about it. Then we will have some discussion relevant standards of auditing. Auditing standards are very much a neglected area, unfortunately. This 700, that is standard opinion of auditor. When there is no modification, nothing is modified, is giving a standard report, everything is okay. So that is under SS 700, that is standard opinion of auditor. As against that, there is 705. Auditor has got the responsibility to modify his opinion. Because suppose certain things, there are material misstatements in financial statement. Our auditor has not received sufficient evidence for certain transactions, certain queries he has raised. Then definitely he has got a right to modify his opinion. Then that is under 705. It may be adverse opinion, it may be qualified opinion, or it may be disclaimer opinion.
Just a disclaimer.
Disclaimer. This audit evidence was not available. You can say it is a disclaimer opinion. If those evidence would have been available, I would have commented.
Exactly. And now, very importantly, while creating UDIN also, we need to give what will be your opinion. That is,
these columns, many columns are added. You raise a very good point.
So we need to be careful with that also, because it has to match with what we are reporting.
There are, we'll be discussing that anomalies. One thing is appearing at 4 places. So you must check at all the places the data is same.
Exactly. Very important.
This is very dangerous. Unknowingly you commit, I don't say it is a willful misconduct, inadvertent misconduct.
Exactly. It is just,
it may happen because of
oversight
volume of work by oversight. Then 706 is also very important in audit report, standard audit report. You see emphasis of matter. There is one para. Emphasis of matter. What are important things you want to suggest, you want to point out to the notice of shareholders, you have to give it under. And that is absolutely critical issues like going concern concept.
Exactly. Any major litigation.
Suppose company has purchased a plot to build a factory. It's a manufacturing unit. And that factory, that land itself is sold. Finish. Going concern is adversely affected.
Exactly.
You got my point? Or major litigation.
Means that plot of land is bought and now it is into major litigation. So there's a big dispute. So again, there might be a...
They cannot carry on the manufacturing.
Exactly.
Then certain litigation. And litigation, we may have very far-reaching consequences. Totally, company may go into doldrums, such a litigation. Stake is very high. So that you definitely report it.
Emphasis of matters.
Emphasis of matter. Going concerns and litigations particularly.
Exactly.
SA 280 is also very important. Audit document. We maintain the paper. Sometimes suppose institute comes for peer review. We give certificate. They can ask you on what basis you are given this certificate.
So that documentation.
You must keep the working papers. In audits also, important queries you raise, you obtain some. Suppose the company has made the provision for interest on fixed deposits. We definitely ask where is the bank certificate for interest. Exactly, whether it is matching or not. That interest certificate copy must be in your documents. For example, small things are there. Some 10, 20, 25 depends upon the volume of a company, size of the company. You must keep those things in your records.
And the auditors with a very small volume, many a times neglect this area. That is what we need to say to our professional brothers, that this documentation is very important. And we need to be very careful to maintain these audit documents as per this SA 280.
Very important. Require the whole day.
Oh, yes.
How the entries should
And that
be
is what we are
passed
doing it from day in, day out.
So I have prepared a special slide for that. It's a very good question, and I really wanted to discuss on that. Auditor must confirm that his appointment is filed with MCA in form
Right.
number 82.
Very important. That needs to be.
See, earlier, few years back, this was not mandatory. Some auditor used to take the appointment resolution and file it with ROC.
Right.
But since after 2013 Companies Act, this 81 has become mandatory, because even when you file the annual financial statement with ROC in written AOC 4, there also you have to mention the SRN of that 81 file earlier.
Right.
And if you put that SRN, the whole name and address and membership number of auditor appears.
Right.
वहां पे आपको वो रोकता है. अगर 81 is not filed, you will have to file with additional fees, and then only you can file the return to ROC.
Exactly. So that
is one thing. Okay, that is different thing. You may not be doing filing of ROC for your company.
Right.
But there is a problem. As an auditor, MCA के पास आपका record चाहिए. You are auditor of this company.
Right. You need to have a copy that you have been
need to have
appointed
that
as
company.
auditor. Yes.
And most importantly, resolution
Yes.
of board of directors.
Yes.
If it is in EGM or extraordinary general meeting, the shareholders resolution.
That copy of resolution
It
should
must
be
be there. Auditor must obtain management representation letter. Just we discussed
Yes.
SA 580.
Right. Very
This
important.
is also a very neglected area, because management many times while making the accounting entries or making some accounting standard entries, they make some assumptions. That assumptions must be there
And
in MRL.
very important that auditor needs to obtain this MRL.
MRL. Stock.
Yes.
Closing stock.
Valuation of that stock.
There are many things, important things, which should be covered in MRL.
Right.
Then most important thing, statutory audit should never use letterheads. I have heard this in various seminars of experts, that there were cases came across, even by the institute, that chartered accountants are typing these financial statements on their letterheads.
Oh, companies'
And that
financial.
is a very big mistake. That is the preparation of accounts, and preparing the balance sheet is the responsibility of management.
And companies.
You are just expressing your opinion and giving your audit report. It should not be on your letterhead. Only auditor report should be on your letterhead.
Right.
These things are very important. Another one, auditor must obtain certified copy of the resolution passed. Just earlier
Yes,
we discussed.
Yes. Board resolution copy that such and such
I
director
even
will
told
be
you
signing.
one case also. There was a dispute and auditor was unnecessarily had a trouble for a couple of years.
Yes.
Fighting with those two directors.
Yes, yes.
You must take the resolution copy with you.
This should be there in auditor's file.
Record,
That
yeah.
you have-
Documentation you can say.
Yes.
Just we discussed the audit documentation under
exactly.
SA. Then auditor should never sign audited financial statements before they are signed by the directors of the company. Normally
basic.
what happens, I have seen people, suppose 2 copies you prepare, audited financial statements.
Yes.
You sign audit report and you give them. Sir, आप दोनों डायरेक्टर का साइन करके एक कॉपी मुझे लाके देना. You give me back 1 copy and 1 copy you keep with them. You don't know
whether they have signed or
the copy which is kept by them, whether it is signed by 2 directors or not. And this is very dangerous.
Very risky. Suppose if it gets scanned and uploaded somewhere where you have signed as auditor, but the directors have not yet signed. It is
on you.
Yes.
That is your default. Definitely. You have never signed the financial statement before they are signed by the directors.
Right.
And auditor must obtain form DR8 signed by the directors. In earlier we discussed section 143.3, your main statutory audit report, independent auditors report. That one of the clause in 143.3G is none of the director is disqualified. There we mention, as per the information and explanation given by the management, we hereby declare that none of the director is disqualified.
But we need to take that letter from them.
Who knows? They are disqualified.
Yes. The declaration.
And that form is DR8.
Yes.
And you should advise the companies this DI rate you must take every year in the first 2 quarters of April.
Okay.
Beginning of the year.
Yes.
Signed by all the directors.
Okay. So
This DI rate says, I am a director in those another, other than this, your company, I am a director in other 4 companies.
Yes.
I am a shareholder in those 4 companies. That is a declaration, sort of disclosure of interest, sort of. And none of the companies I am disqualified. I hereby declare.
Yes.
That DI rate, and that is not required to be filed to MCA.
Right.
That is just on the
record. That what copy should be, that declaration should be available with the auditor.
Auditor shall. And that director should give to the board every year. And same copy you obtain for your record.
Yes.
So these extra cares must be taken by the statutory
very important
auditors.
Yeah,
yes.
These all things would be very helpful for our professional brothers, that this care needs to be taken by
very important. Then Abhijit, these are okay, various general things we have covered. Let us go to penal provisions.
All draconian things.
Yeah, all draconian things, and it's a warning, and you can say it is a red signal for the auditors and all our chartered accountant fraternities. Those sections are so serious. Their impact is so big. So you can't imagine.
Yes.
Out of that, we just discussed under 129, true and fair, and there is subsection last 129(7). Same thing I am coming to here. But actually, this is not on the auditor.
Yes.
But still, I am discussing that is on directors and officers of the company because they don't comply with the accounting standards. But our professional colleague, who is a chartered accountant, might be there as a CFO. And he also attracts those penal provisions. So our industry brother
needs to be very careful.
About 129(7).
Yes.
Then this section 448. You see, basically Companies Act, or you take in any act, whether it is Income Tax Act, whether it is, last subsections are all penalty and fine sections.
Yes.
तो बोलते हैं ना गम्मत से कि अगर तुम last subsection पढ़ोगे तो आप practice नहीं करोगे.
Exactly. That is a demotivating section.
The demotivating section. But there are 2 general sections in Companies Act.
Yes.
Which cover all sections. That is 448 and 449.
Okay.
And heavy penalties are there. All auditor must be careful of this 448 and 449. Yes. See, making false statements in any report, it is exhaustive, broader concept. Any report. Certificate. Prospectus, because many certificates are given in prospectus when company comes for the public issue.
Right.
It is punishable as a willful fraud. It is not just a mistake, it is treated as a
willful
fraud. And it attracts penalties and imprisonment up to 10 years. So there is a criminal prosecution.
Yes.
So this is statements about false statements, material misstatements, material false statements. 449 is little different. There is a hairline difference between 448. This 449 talks about the affidavits you give.
Okay.
False affirmation on oath you give, in affidavits or in any proceedings which are going in court of law, or going in tribunal, going in company law tribunal, or going in income tax tribunal, where many times you are required to give the affidavits.
Right.
Correct? So any misstatements in this affidavit also attracts a lot of penalties. It attracts imprisonment from 3 to 7 years. Here I will point you one very important thing. If you are filing ROC returns, annual returns, say AOC 4, annual return,
right,
and MGT 7, then directors digital is there. Auditors digital signature is on AOC. Many times it is there. Small companies it is not there.
Yes.
Whenever your signatures are there, charges registration form, for example, directors forms, there. When you give your digital signature as a professional, there below that there is a warning. Be aware of section 448 and 440.
Exactly.
It is given in MCA form
also. Yes, they are giving you that warning also very clearly.
That warning is given. देखो, होता कुछ नहीं है, बरसों निकल जाते हैं.
हाँ, कभी तो भी.
हाँ. So these sections are very
That due care has to be taken by professional brothers.
due diligence, what you
Yes.
call. That has to be taken. That was my purpose of discussion today, other
No,
than
perfect.
technical matters of accounting entries.
And that is what is required. Everyone is aware about the company law, but what care we need to take
Before we, at the end, we better discuss this NAFRA.
NAFRA, yes.
Because it is very much to the root of our heart.
Yes.
Chartered accountants are concerned. Section 132 was in there in Companies Act 2013, where NAFRA was established by the central government. So it basically monitors and enforces the compliances of accounting standards and auditing standards. So,
yes.
And in my earlier slides, we have discussed the importance of accounting and auditing standards.
Yes.
And you must be now knowing, as far as these accounting standards are concerned, these accounting standards were prepared by Institute of Chartered Accountants of India, our institute. And they were then accepted by the central government.
Right.
And then government, if they feel that, okay, this is okay, they used to prescribe it under section 133 of the Companies Act.
Right.
But when NAFRA came, we must remember one thing. They say ICI can recommend, you see the word.
Yes, that has changed.
Accounting standards. And then central government will prescribe those accounting standards in consultation with NFRA. NFRA if says no, that will not come.
Right.
If they make some changes, it will come out with the changes. So it oversees the quality of audit done by the Chartered account. I have seen now, I don't know exactly, don't have data, but they are slowly moving. Selecting cases on sample basis, 2%, 3%. Now they are concentrating on listed companies.
Right.
And they are selecting some audit reports where there are major material mistakes in the reporting.
That is, they are continuously monitoring all those things.
Continuing. And dhire dhire wo niche aayega to the bottom.
Barabar.
In over 5-10 years. Now they are concentrating on big companies, big listed companies.
Exactly. That is their now domain.
It has power to investigate professional misconduct and penalizing the defaulting auditors. And here you must remember one thing. When the proceedings are initiated by this National Financial Reporting Authority, other organizations which have already initiated the proceeding, they have to stop it and it will only be run by NAFRA. So this is also very important. So in fact, NAFRA has got powers of civil court.
Exactly.
Jैसे SEBI को power है ना, tremendous power SEBI has got after judiciary.
Yes.
The same powers have been given to NAFRA.
Right.
So we auditor have to be very careful since the inception of NAFRA. You see the penal provisions of NAFRA, 132 subsection 4. For individual chartered accountants, minimum 1 lakh, maximum is 10 times of the audit fees you have charged.
Yes.
And for firms, it is minimum 5 lakhs and 10 times of the audit fees you have received. And most dangerous one is debarment from practice. Your audit certificate is, they recommend to the institute that you withdraw the audit certificate. And that certificate withdrawal, debarment from practice is for minimum 6 months and it can stretch to maximum 10 years.
10 years.
And I don't know he will come again after 10 years.
Yes. So now when we are understanding the serious consequences of all this, so if you could, sir, highlight on what are the common mistakes that are committed by our professional brothers. Obviously, it is never intentionally done, but unintentionally, what are, these common mistakes which are getting committed by them in these annual audited financial statements?
Certain things are very funny. I mean, I should not discuss it, but suppose there are a previous year column.
Right.
I have seen the cases. Because many times I had an opportunity to sit in the office of ROC for certain meetings.
Right.
And 2 years back, previous year column is maintained as it is. Suppose you are you copy paste last year's balance sheet.
Right.
No?
Inadvertently.
So previous year column should be replaced. This is also many common mistake
Mistakes
committed many times. So childish mistake I can say, but
we have to be careful with
we have to be careful. On many occasions, government authorities on various forums, they have pointed out that Excel balance sheet, final balance sheet, with the mention of SD means signature,
Right.
you know?
Yes.
SD. And they are uploaded
Oh,
to MCA, to income
not
tax.
actually signed.
That is not a good practice. That is not a healthy practice.
Right.
Only signed balance sheet and scan copy of the signed balance sheet
Should be uploaded.
should be very careful, should be uploaded.
Right.
See, many times what happens, you are auditor, but you are not filing the return, suppose. It is their responsibility.
Right.
But this advice you can tell them, but don't do this. Sign copy only you submit to the authorities.
Right.
Signed by directors and signed by auditors. Then another important thing is, as an auditor, most alarming area is mismatch of figures reported, data reported.
Where you have to report it at multiple places.
Multiple places. So related party transaction you mention in notes on accounts.
Right.
Disclosures.
Yes.
You know,
Exactly.
sister concerns, purchase, sale, rent paid to sister concern,
salary.
remuneration to direct.
Exactly.
Same related party transactions are mentioned in board report also.
And and there should not be clearly any variation there.
There should not be variation. Same related party transactions are to be mentioned in AOC 4 when you file the balance sheet to the MCA.
Right.
So 2, 3, 4 places that figure appears.
Right.
So there should not be a variation between different paper, different documents.
Very important.
That is very important. CSR expenditure. Same way, you mention in additional disclosures. You have to mention in director's report.
Right.
Again, you file the form to ROC, AOC 4. There is a special disclosure for the CSR expenses.
Right.
So all 3 places, those disclosures should be
There.
same. With last rupee.
Rupee. So exactly.
AC. Then another important thing is, now MSME defaults. There are disallowances under 43BH, I think, in
Yes, of Income Tax
Act.
Act.
We report in tax
Yes.
audit report.
Yes.
Same MSME defaults must have been appeared in balance sheet notes on account.
Right.
There you have to mention the interest also, which provision whether
if
it
any
has
made
been made
or not.
not. 3 times of the bank rate.
Right.
So whatever MSME defaults are there, then you are required to file MSME 1 return also, which is a 6-monthly return to ROC.
Exactly.
Auditor must obtain the copy of the MSME 1. There you clear cut come to know what are the, because MSME defaults in 43BH are only which are outstanding on 31st March.
Normally what we report.
No, it is like that.
Right.
So MSME 1 return, whatever figures you have reported in balance sheet and whatever figure you have mentioned in tax audit report,
Yes.
all 3 places, because you may be signing tax audit report also, you may be signing balance sheet also at a time.
Yes.
So there should not be a variation.
Right.
These mistakes are committed many times. Some figures different of thousands or in lakhs, the figures may differ.
Yes.
That should not happen because you only are signing
Right.
both
right,
the reports.
Right.
Then mismatch of, I tell you, related party transaction that we have already discussed.
Yes.
So these types of, then shareholding, most important.
Changes that happens.
You mentioned in authorized capital clause. we discussed in earlier slides.
Yes.
Promoter shareholding is there. You are reporting. Then 5% shareholder who are holding more than 5%, they are reporting.
Right.
One list is submitted to ROC along with form MGT 7A, annual return filed to the MCA.
Right.
Everywhere that figure should say. Normally, many times what happens, we mention last year's figure in current year's balance sheet also.
That common copy-paste mistake happens.
May be there. And why that mistake is there? Because there may be some transfer of shares during the year. And you must tell your management that whenever transfer of shares are there, because this transaction is out of books of account. That is between two individuals. That is never rotated through the company books of account.
Right. So those entries doesn't
You
appear in the
must,
company's
and
book.
basically every year you must make an inquiry.
Yes.
बाबा कोई share transfer था क्या?
So very healthy practice that we need to carry out. That tell management that if there is any share transfer, inform us on that day itself. That is what
very
normally
important.
You suggest.
Okay. And I will tell you, even auditor while finalizing, they must take the master data from the ROC website.
Right.
Many times it happens they file the return of allotment.
Yeah.
Their paid up capital increases in master data.
Exactly.
You must keep a track of that. Even for charges, you have to report in additional disclosure.
Yes.
And there is an index of charges is available.
That we need to obtain.
On MCA website. You need to obtain it. You must watch it, whether new loans are appearing in index of charges or not. So these are normally
all these important things that we need to take care of.
Yeah. And you remember ultimately what happens here, responsibility को कोई limit नहीं है.
बराबर.
Responsibility say, liability say, there are no limits.
Right.
I think I'm sure we have discussed many important aspects as far as reporting is concerned.
Yes.
And I think in short, we will cover some 4-5 event-based compliances.
Okay. Yes.
See, filing annual returns, AOC 4 and MGT 7 are annual compliance.
Right.
But there are certain event-based compliances that if auditor is change, then whether those forms are submitted, directors are changed, constitution of board is changed, whether those forms are how to submit that, then change of registered office.
Yes, all these are very important events that we need to take
today. We will just throw some light on that.
Yes.
First, I will take this auditor's appointment, which is covered by section 138 to 148. 148 clause, that is internal auditor, and it comes under chapter 10 of the Companies Act 2013. Section 139 is totally devoted to appointment of auditors. Let us be very precisely, I want to mention that first auditor has to be appointed when company is incorporated. And the law is he must be appointed within 30 days of incorporation of the company. And that is the time board has got power to appoint the auditor. Because there is no question of annual general meeting.
Right, exactly.
And after a first auditor is appointed in first board meeting, you have to inform the MCA in ADT 1.
Right.
There you have to take the eligibility, come consent letter from the auditor, resolution passed by the board of directors, and intimation given to auditors that you are appointed. Yes. These 3 documents are to be attached to the ADT 1. This is the first appointment of auditor. Then let us come to subsequent appointment. Then first AGM will come. In AGM under 2013 Act, one very good provision has come. Every year you need not file this ADT 1, which earlier we used to do.
Right.
Now you can make the appointment for 5 years straight. Right. And that power has been to only AGM, not to extraordinary general meeting.
Right.
So every audit, and for if it is a firm, then 2 terms of 5 years each. Of course, rotation is not applicable to small
companies, right?
Subsequent appointment at AGM, and before appointment, company has to obtain that eligibility consent letter, whether he is ready to accept as an auditor or not. That care has to be taken. And no doubt it will be required because that is a attachment with the ADT 1 form, which you submit to the MCA.
Right.
Rotation of auditors, certain companies have to rotate. Out of that is listed company, it is mandatory.
Right.
Rotation. Public companies with a paid up capital of rupees 10 crores, for them it is mandatory. Private company with a capital of 50 crores. Rotation is mandatory. And you will be surprised, in a listed company, our institute's ethical code says that this rotation of even partner of the firm
Has to be there.
has to be there
Okay. Okay.
after every 7 years.
Okay. So in a firm, if a partner is signing an audit,
He
then
should not sign for more than 7 years.
Okay.
That is the ethical code of ICI.
Okay. Okay.
Separate, different from Companies Act.
Right.
Remember, there are small things connected with the audit.
Very important that you have to take care of.
And there also cooling period of 3 years is there.
Yes.
After 7 years, he will not be there for another 3
3 years. Right.
at least. A resignation by auditor, many times it happens. There are two things: resignation by auditor, very smooth; removal of auditors, very dangerous. Like removal of directors.
Right.
I'll explain you in short. Resignation of auditor, when auditor gives the resignation due to certain reasons. Remember, reasons must be genuine.
Yes.
Now they are making inquiries. And in form ADT 3 you file while giving the resignation. They have to make a reason in short.
Yes.
So to not only that he has resigned with effect. Now you have to give the
Reasons also.
Normally practice is due to unavoidable circumstances. Okay, they don't take any objection. But in that resignation letter must be addressed to the board of directors.
Yes.
And I'll suggest that after you submit, give the resignation to board of directors.
Okay.
You sign it, correct?
Yes.
And one resignation letter, you take the acknowledgement of director that we have received it.
Right. As a it's a safety for
And actually both the attachments you file along with ADT 3. Because when you resign, ADT 3 filing is the responsibility of auditor, not the company.
Okay. So
And there are heavy penalties. Minimum penalty to auditor is 50,000 and maximum is 5 lakhs
yes, and that is to auditor.
to auditor, not to the company. So this is a very serious matter as far as ADT 3 is concerned.
Right.
Suppose auditor has resigned, then company has to conduct the board meeting to accept the resignation. Then, important thing, you see, basically in Companies Act, one must remember appointment of auditor and appointment of director is an exclusive right of the shareholders and members of the company.
Yes.
That power has not been given to board of director except some extraordinary circumstances. So even you retire by resignation, board will approve your resignation, correct?
Yes.
But they will have to call extraordinary general meeting of shareholders within 3 months of auditor's resignation.
Okay, so that is important.
Means he should be appointed with the consent of the shareholders. And then you file again ADT 1.
Very important.
So basic, this right has been given to shareholders. And removal of auditor is very complicated. You cannot remove him ex parte. Same thing, you cannot remove the director ex parte. You have to give him a notice. He has been given a right to attend that extraordinary general meeting, and he has a right to be heard.
Very important.
And still after his arguments, if resolution is passed, and that is a special resolution, it is not ordinary.
Special resolution.
Still that special resolution passed, he is removed. Extremely undemocratic.
So that much safeguard is being given to him before
he must be heard.
He is being removed.
He must be heard. Like show cause. Why? Tell me why I should be removed. What are the problems?
So now, considering these all tremendous responsibilities that has been put upon the auditor in this corporate world, so what is your opinion that this all this burden that he has to be?
No, the reason is, see, one thing we must be sure that you are a part of a very esteemed organization, that is Institute of Chartered Accountants of India, which is recognized all over the world. And accordingly, even we, the CA fraternity, should also behave in that responsible manner. There are, because see, so corporate world as well as society in general look at you. They have reposed a trust in you.
Exactly.
They have a lot of faith in auditors still today. Correct? And it will be there, no doubt, I am sure. So you have to be very careful about it. When see somebody reposes a faith in you, you are shouldering a lot of responsibilities.
Exactly.
जे त्यांच्या त्या मराठीत म्हणता ना, त्यांच्या विश्वासाला तडा नाही गेलो पाहिजे.
बरोबर. राईट.
That is the responsibility. Audit is a vital point in the financial stability of the corporate world, financial health of the company. Apart from this, you see, our audit got a very important place in the society as a whole and corporate world as a whole.
They've kept so much faith on us.
Another thing I would like to mention, as you asked me, apart from regulators, they are reviewing and all this. Even I tell you, you issue many times many reports other than audit reports.
Right.
Many certificates you
Certifications
issue. And you see, on the basis of your reports, on the basis of your certificates, many crucial and important decisions are taken in corporate world while making corporate restructuring.
Right.
Like say takeovers, amalgamations, mergers, even public issue of security. You are certifying many things. So your job is extraordinary, you can say. You are certifying here, you are certifying the credit worthiness of the company. You are certifying the solvency of the company. Right. Bankruptcy code में देखिए कितने certificate लगते हैं chartered accountants. So apart from audit, financial statements, these are another greater responsibilities on your shoulder.
Right.
And you must be careful about
with that. Yes, sir, 100%.
And I'll tell you here one important thing. Let me 2 minutes. We'll go back to our institute's logo and motto. We are discussing responsibilities and you know what is logo? That Garuda picture.
Yes.
You know, it was designed by Mr. Arvindo Ghosh in 1950 after the institute came into existence. And there is a picture of Garuda.
Right.
What is Garuda? Importance of Garuda? It reminds to all chartered accountants
that we are aware
that it is the bird which likes to fly at a soaring height and keeping attention everywhere. So we are like a Garuda. Vigilant bird like a Garuda.
Yes.
And what is a motto?
Yes.
Supteshu Jagrati Kamam Purusho Nirman Minaha.
Yes.
Tadeva Shukra, Tadeva Brahma, Tadeva Amrutam Richate, Tasmin Loka Shrita Sarve Tadu, Etad Vaitad. And this is very important slok. Many chartered accountants may not be knowing from where it is taken. You know?
And
it is taken from Upanishad.
Yes.
And that name of the Upanishad is Kathopanishad. It is taken from Kathopanishadana. Esha Supteshu Jagarti. So the motto and logo is a reminder to the chartered accountant. Esha Supteshu Jagarti. You must be awake when everybody is sleeping.
Right.
And that is a fact.
Yes, exactly.
Company kuch bhi kare, aapko vigilant rahna hai. The responsibility is on your shoulders. Correct?
Right.
Then we will discuss in short some slow formalities.
Yes.
Audited, this is a filing of audited financial statements with MCA. See, many chartered accountants, they may be filing the ROC returns of the firms, companies which they are auditing. Some may not be.
Yes.
But let us know the provisions. Section 137(1), this audited standalone balance sheet and audited consolidated balance sheet, which is signed, then after it is adopted at the annual general meeting. And these days of counting to MCA is counted from the day of AGM.
Yes.
So balance sheet which is submitted through AOC 4 or AOC 4 CFS, there are 3 types of forms AOC. AOC 4 normal company, AOC 4 CFS means consolidated financial statement. So in that case, you have to file 2 AOC. AOC 4 normal and AOC 4 CFS.
CFS, consolidated.
And one AOC 4 is XBRL.
For big companies.
Big companies. You know XBRL, that is extensible business reporting language. And it is applicable to those companies, either their turnover if it is more than 100 crores or paid up capital is more than, whatever condition is hit, XBRL is applicable. So you have to file this return within 30 days of annual general meeting. And laws are very difficult. Abhijit.
Penalties are huge.
Penalties are, no, I am telling you another thing. It may happen, AGM was held and balance sheet was not adopted due to certain reasons.
Certain reasons. Then what to do?
Still, they say you submit the unadopted balance sheet to ROC, section 6. Then another situation is, AGM was held, but audit was not done till that.
Then you have to still submit the financials.
Submit, provisional. There are so many complicated rules are there, but actually these are all extraordinary circumstances. Then if AGM is not held, you have to still file unadopted financial statements. Then another one is filing annual return, where two returns, annual compliances are there, like income tax annual return, GST annual return. These are the annual returns, the AOC 4 and MJT 7. The AOC 4 is required to be submitted within 30 days of AGM. This is required to be submitted within 60 days of AGM from the day of AGM.
Practically both get submitted together only, practically.
Practically. If you are able to do it, you should do it.
Yes.
We are doing it.
Normally, yes.
If there is a load, then you take the decision by October mein tum file AOC and in
MJT you file later
next month you go for MJT.
That is what we do in income tax also. While uploading the audit and accepting the audit report, we file income tax return also. Otherwise there is 1 month extra.
31st October. Every listed company in other company whose turnover exceeds 50 crores or paid up share capital exceeds 10 crores, annual return shall be certified by company secretary in practice.
Yes.
So it is to be certified by company. Earlier there was a form MGT8.
Right.
The separate certificate was there, which was required to be obtained from the practicing company secretary and attached with this MGT7.
Right.
But now they have embedded the provisions in MGT7 itself.
Yes.
Whatever matter was there in separate certificate, that is included in MGT7 only. So separate MGT8 is not now required. Then we'll discuss some appointment and retirement of directors in short.
Yeah. Quickly we will
The first directors, they are appointed at the time of incorporation and their names are mentioned in the articles of association. Their following are the first directors of the company. Their appointment is not required to be filed to the ROC.
Yes. Okay.
Like first auditor. Because they are already informed at the time of incorporation. But that is already recorded in the MCA record.
Yes.
Which is not the case with auditor.
Right. That is not there. Right.
But they are already there at the time of incorporation. So they are not like first paid up capital.
Yes.
Subscription. That is not required to be filed. Return of appointment of a new director. As I said, appointment of director and appointment of auditor is exclusive right of shareholders.
Yes.
So either you appoint in extraordinary general meeting of shareholders or annual general meeting of shareholders. So obtain dean. Dean is mandatory, director added. If he has not won. And now recently they have included very important provision. When you apply for a dean of a person, there only ask in which company you are going to be appointed.
Okay, so that is.
And that company's director's digital signature is also attached.
Okay.
Along with this person's digital signature who want to become a director. Obtaining dean. उसी company का भी लेना पड़ता है where he is proposed to be appointed. First time if he is doing it.
But sir, suppose a company is getting incorporated and that is a first director. So still that company is not in existence, but we take a DIN for a director.
There it is not there. No, there DIN you get automatically. Okay. Now the provision is incorporation में DIN नहीं भी रहा तो automatic आ जाता है.
They will allot you a DIN.
Allot DIN. Now,
but in that case, I think we need to be very careful. If let us say there are 3 directors, out of that one director already have a DIN, then we need to mention it very properly.
You have to mention it. There are columns. Earlier DR2 was required, consent letter of director. Yes, I am ready to. नहीं तो कोई किसी को भी appoint कर देगा without his intimation.
Right.
But now DR2 like the MGT8 is also part and parcel of the DR2. Separate DIN2 is not mandatory. DR2 is not mandatory. And as I said, appointment of director is an exclusive right of shareholders. Other appointments, there are other appointments which are normally not for the private limited company, that is alternate director. Who, suppose there are chances that he is out of India for a continuous period of more than 3 months. Who will attend? Because the provision is, if he is not attending 3 consecutive board meetings, that is a disqualification of director. So he can appoint alternate director who can be present of the board meeting on his behalf. So that is a provision. That is why safeguarding provisions are there in companies.
Right.
Then there are certain things, a nominee director. You see, there are huge loans are given by the banks and financial institutions. So it is their right to appoint their nominee, their representative on the board of directors of a company.
Yes.
So they are, and company has to accept it. I told you that is the exclusive right of this is very important, additional director. You try to understand the provisions. I said that is the exclusive right of shareholders.
Yes.
But see, it may happen during the course of company's functioning. There is an urgent need of one technical director they want.
Okay.
And AGM आने को 6 महीना बाकी है.
Yes.
Extraordinary general meeting will take 3 weeks because notice period and all
those things.
So there a weapon is given in the hands of board of directors under section 161. Okay, during certain extraordinary circumstances, emergencies, we give you power to appoint the director.
Okay.
So board can appoint the director in the board meeting and he will be called as additional director. But again his tenure is restricted.
Up to AGM.
Up to immediate next AGM, where he has to be confirmed, his appointment should be confirmed with the consent of shareholders.
Right.
Next AGM. So his tenure, if that resolution is not passed, automatically he will have to vacate the office. And remember one thing regarding filing, that additional director when appointed, definitely you file DIR 12 to MCA for appointment. Yes. But there on MCA master data, his designation will appear like additional director. But in AGM, when he is confirmed, he becomes a full-fledged director. Again, you have to file DIR 12. In DIR 12, there is one option, change of designation. Not appointment, but you click on that change of designation and you mention now, instead of additional director is appoint confirm as a director. So automatically his designation is changed in the MCA master data.
Right.
From additional is replaced by the full-time normal director. So these things are very, so again, so in this case, in case of additional director, you have to file the DIR 12 2 times.
Right.
One as an additional director, another one after AGM as a normal director. And but there you only for, because if you fail to click that designation, he will not accept the form. He said this is already there in MCA website.
Right.
So that website is so perfect. He will cross, he will raise the error.
Right.
You already filed DIR.
Right.
Limited company, if they want, they can make the provision in the articles of association
For rotation.
But it is not mandatory for them. Retirement of director, as I discussed, like auditor, that resignation letter must be there under section 168, which must be approved by the board of directors. And when you file this DIR 12 for the retirement, within 30 days of retirement letter, only that resignation letter has to be attached. In additional attachment, I advise you attach a resolution for the retirement passed by the board of directors. Then actually this is not close to the heart of a private limited company, but let us discuss in couple of minutes. The independent director, when these provisions are incorporated in section 149, they are mandatory for listed companies. Means at least 1/3 of the board of directors must be the independent directors. This is the basic provision under Companies Act. Actually, they are as a watchdog on the because public funds are involved. This is simple phenomenon.
Right.
So this is a very good provision, and many good, even chartered accountants, if you want to become independent director, and ICI also has got panel. There you can register yourself and company can collect you from that panel, and you can be as an independent. But there's a very thorny share.
Yeah.
It's responsibility of joint and several, so people hesitate
It to
normally.
be there. Right.
Because you are again held responsible if something wrong happens in
with
the
company.
But of course, then onus is on you to prove that I was not involved, directly involved. But again, headache is there.
Without your knowledge and without your
still headache is there.
Yes, for sure.
But it is a good thing. I mean, a very prestigious positions.
Yes.
Listed company is mandatory. Unlisted public company, if paid up capital is 10 crore or more, or turnover is 100 crore or more, public limited, which are not listed.
Right.
And borrowings from bank, public deposit debentures is more than 50 crore more. For them, then independent directors are must have at least 2 independent directors.
Yes.
Listed में 1/3 of the board है. फिर अगर 15 का board है तो 5 लगेगा.
Right.
At least 5. But unlisted public में minimum 2. And he can hold office for consecutive 5 years. He can get 2 consecutive terms of 5 years.
Reappointment. Yes.
But he is to be appointment must be in extraordinary general meeting with the consent of the shareholders. And listed company को special resolution is mandatory. Appointment के लिए. An unlisted public company, you can appoint the independent director with ordinary resolution. Then we will take another event-based compliance with change of registered office. There are many occasions. Registered office may be changed within the same city. It may be changed from one city to other city. If it is within the same city, board resolution is sufficient. Shareholders' consent is not required.
Right.
Ordinary resolution passed by the board of director. You have to file INC 22 within 30 days of that board meeting.
Yes.
And this attachment is, most important attachment is utility bill.
Yes.
And electricity bill is preferred by MCA.
You have to.
If it is, so many times what happens, you give the address of director. But now it is as we know that books of accounts were kept. That is a very sensitive issue.
Related to income tax, stat audit also.
Income tax and all that. So utility bill is must, board resolution is must. If it is a rented place, you attach lease agreement. And in case of director's premises you are used, you just give director can just give a consent letter that I have allowed to use my residence as a registered office address to this company where I am a director. And now recently, one year back, they have added one thing, geotagging photographs you have to attach.
Exactly.
One is that board with scene number and that.
Right.
In front of that building,
yes.
And there that director is standing.
Yes.
And one photo inside the office of the director, he is sitting in the chair. So 2 photos are to be compulsory to that. And this is ordinary board resolution. If you are changing the city, then you have to call the extraordinary general meeting. That cannot be done without the consent of shareholders. Within city, board can do it without informing shareholders.
Yes.
Then you require special resolution. But when special resolution has passed, before INC 22, you have to file MGT 14.
Yes.
And file that special resolution. And in INC 22, you have to mention the SRN of MGT 14. That to prove that you have filed MGT 14. Right. And third is very complicated thing if ROC jurisdiction is changing. Abhi Bombay se Nasik karo to ROC jurisdiction change hota hai because we are not in Marine Lines ROC.
Right.
They have separated it. We are not, Nasik is now under Vashi.
Okay.
ROC 2.
Okay.
And one ROC is in Pune, all Western Maharashtra. So we are not at all in ROC, main ROC, jo hamara tha, Marine Lines. Only Greater Bombay, Metropolitan Bombay is in MCA 1. ROC 1.
Yes.
ROC 2 is New Bombay. Nasik comes under Bombay. So वहाँ पे और formality है, newspaper advertisement है, because ROC jurisdiction
changes.
Then consent of creditors and bankers.
So that is also required.
Then one INC 23 additional form is there. Petition has to be given by a board of directors. There are no litigations.
Okay. If you have to change it.
There are major complicated formalities are there if you are changing from jurisdiction of one ROC
to another ROC.
Or you are changing state. One state to another. Because ROC totally
obviously
changes.
Then the ROC to change.
So formalities are thoda detail hai.
Yes.
One DPT 3 again, you know, some
that is also very much required.
7-8 years back. 7-8 years back, DPT 3 came. Basically, I will explain in short. DPT 3, you have to report exempted deposit as well as private limited companies are concerned. What are those secured loans from banks? unsecured loans from the directors and their relatives. Then customer advances less than 365 days.
Yes.
Correct?
Yes.
Then security deposit taken from the customers, security deposit taken from the employees. Many times you received the subsidies from the government. That is all. What are there on credit side?
Yes.
And which are treated as exempted deposit. Even intercorporate loans are also treated as exempted deposit for private limited companies. You take loan from another company. So those are reported on annual basis. Earlier, DPT3 was very simple. Only closing balances on the year end.
Exactly. Earlier.
Now opening, additions, deletions, closing, and again aging. Less than 1 year, 1 to 3 years, and more than 3 years. So job has become absolutely complicated. Takes a lot of time.
And as an auditor, you need to have data for multiple years with you to report all those things. You can't
Basically,
rely only on 1 year
data. The purpose of DPT3 is they want to monitor the financial activities of the company. Basically, monitoring the financial activities of the company, and thereby you can say reducing the risk management, reducing the risk factor. But certain companies are exempted, banking companies. वो लोग कहाँ से DPT3 फाइल करेंगे? उनका तो बिजनेस ही है,
लोन लेना ही है.
So banking companies, non-banking finance, NBFCs, government companies, insurance companies, housing finance companies, they are exempted from filing the DPT3, and it is filed once in a year. Every year after the end of the year, within 3 months, that is 30th June is a, suppose you are filing for 25-26, last due date was June 30, 2026. This year, they given the additional time limit of 1 month, that last date was 31st July, this year particularly. Again, some 2-3 minutes on registration of charges. See, Abhijit, creation of charge, when you take a term loan and working capital from the banks or any financial institution, you have to register that charge within 30 days.
Right.
And there are here, after 120 days, you cannot file it only. So it does not accept the form. पहले तो कैसा था कि paying additional fees you could file. And registration of charge after 1 month, there is a percentage on the basis of loan amount.
Oh, that much.
Ad valorem stamp duty that call, and that goes to MCA revenue.
Oh, and that needs to be paid by
some percentage of loan.
Oh,
it may go run into thousands.
And that would become a cost for the company or the lender?
Company. Company has to pay. Filing responsibilities on company. So better it is filed within 30 days, new loan. Then modification of charge many times what happens? There are certain modifications. Means suppose you have registered a charge of 1 crore of CC. You filed it. Next year that limit is enhanced to 125 lakhs. 25 lakhs se pada hai. So 1 crore 25 lakhs.
Right.
So earlier it was registered because, and this is annual working capital sanction is that is for 12 months.
Right.
Next time, in case of renewal, if it is increased to 1.25 crores, then you have to file again this charge registration.
Exactly.
Form.
Right.
For enhancement. Why it is called modification? Don't click on creation.
Creation. It has to be modified. That column has to be very properly.
Sometimes it is part satisfaction. See, sometimes you file company, kya hota hai beginning mein? Term loan 1 crore sanction and working capital 1 crore sanction. I advise you file separate charges. Because term loan is going to finish someday.
Right. And this may continue.
And if there is a combined charge of 2 crores and term loan is closed, then that is called modification cum part satisfaction.
Right.
So you take a letter from bank saying that out of 2 crore, term loan of 1 crore was satisfied and only 1 crore CC is remaining. And you attach that. There is no agreement. You only attach that letter. That is called part satisfaction. But there also you have to click on modification. Because that is your charge is modified. Amount is reduced.
Right.
And one is satisfaction of charge, that is full repayment of loan. Just you have to take a letter from bank that this loan is fully repaid and there are no dues. That is the only attachment to the form. The fresh charge to be filed in CHG 1, 30 days, sanction letter and agreement copy, 2 things are required to be attached. Modification may reduction or enhancement of working capital limit, additional securities offered.
Mm-hmm. Now, this is very interesting point that many a times when loan is taken by the corporate, they offer some additional securities, and then what you will opine on that effects that are there on this charge registration. If you
No,
could
what happens,
elaborate on
I'll
that.
give you an example of working capital limit, which is again say stock and book debts.
Mm-hmm.
CC limit, working capital limit is always on current assets.
Right.
It is debtors, that is trade receivables and closing stock on hand. Correct?
Yes.
So suppose it is sanctioned 1 crore and prime security was offered. Correct? Stock and book debt.
Right.
And they want additional security bank after 6 months. They take immovable property mortgage. An equitable mortgage is registered. And they say, ये security भी add करिए आप ROC के record में.
Right.
They play a safe game.
Yes.
At that time, again you have to file CHG1.
Right.
But at that time, please don't mention as a creation of charge. It is modification.
That is important.
If you click on creation, two charges of 1.25 crore will be registered. 1 crore will be registered at MCA site. So when you offer additional security, you just say in the form, it is same loan, no limit is enhanced, no limit is reduced, only we are offering additional security of immovable property.
That is important. Yes, sir. Yes.
And satisfaction तो बहुत easy है, no due certificate from bank and you file CHG4 to the...
Yes. Yes, so sir, it was just what we can say, a brief summary of all those things from an auditor's point of view, what you explained. And I think our professional brothers would be very happy to have this webinar and listen to it and gain knowledge and see that proper care is being taken. And it would be really helpful for them for this CA practice as an auditor. So thank you very much, sir. And it is always a delight to hear from you. Nasik branch is blessed to have you as a member and as a faculty always there for us.
It's my pleasure.
And thank you all for this opportunity that is being given to the Nasik branch. Just to share that this video has been created for educational purpose, and it is the opinion framed is for the knowledge and for the understanding, but still you have to take a professional advice while taking any decision. Yes, sir.
Thank you,
yes.
And giving me chance. I express my deep gratitude to the branch.
Thank you so much.
Particular to Abhijit Modi. When you approach me, I was into motion, and I was thinking rather to, instead of accounting entries and accounting transactions, let us focus on care to be taken and what are the legal aspects are involved when you certify certain things. That was my main thrust.
Yes.
And I think, I hope I did my
No, sir, thoroughly.
best.
Yes, I think that would be a very really helpful for all the members.
My apologies even to you, to branch and to viewers. In my discussion, if at all I have committed some inadvertent mistake in presenting, I'll be sorry for that. But I did my best. I took a lot of care, and
it was thoroughly educational and really entertaining also. I could say that it would be helpful for all the members to have this in hand while signing as an auditor also. Thank you so much, sir.
My pleasure. Thank you
so much.